and breaking news coming out of the Times Square studio as Amazon.com reports its quarterly results. Okay, Amazon Q4 earnings on a per-share basis blows the doors off the street's expectation of $1.31. It looks 36. It looks like we got $1.54 on a per-share basis out of the world's biggest online bookseller. Although on a top-line basis, sales did come in below expectations. $43.7 billion versus the estimate of $44.7 billion. So $1 billion miss from Amazon.com. The company is providing some guidance as well. It says sales in its fiscal first quarter, worst case scenario, $33.3 billion. Best case scenario, $35.8 billion. The consensus estimate is more than $36 billion. So while Amazon has beaten on the bottom line, it's missed on the top line by $1 billion, and its guidance is weaker than the street's expectation. Let's get a sense as to how the street's reacting. Look at that 2.5% discount on the stock today, down to $817 per share. On shares that the street consensus, broadly speaking, is buy. 89% of the analysts polled by Bloomberg do have a buy recommendation on it, and the consensus is it'll be a $950 stock over the course of the next 12 months. I want to get insight, though, into the numbers and the buyability of Amazon shares at this point in the game. We're going to take you to New York, and the head of research at Manhattan Ventures joins us now, Santosh Rao. Good to have you with us.
Good, thank you. Thanks for having me.
How does the $1.54 versus the estimate of $1.36 compare to what you were anticipating?
Yeah, I think I was pretty much in line. I was slightly above consensus, so the bottom line is good. But I think the key issue here is the top line. That was soft, but it was not that bad, actually. I mean, they had guided to 42 to 45.5, so they are slightly above the low end, slightly below consensus. So I would say they're within range, and even the forward estimate is slightly below consensus. So I would say it's soft, but not very bad. And that's what Amazon is. It's always a work in progress. They are investing for the future. Looks like I need to dig in deeper to see where the revenue was where the revenue was soft. I need to look into the AWS part and see whether that's growing strong. Want to see their video business. So we need to see a few parts in between here. But overall, I would say I think I would buy on any weakness here because this is a long-term story. Okay, so let's talk about AWS, the Amazon Web Services, their cloud offering specifically. I'm looking at the expectations that they would bring in $3.61 billion worth of sales, but it looks like $3.54 billion. So there's a slight miss on AWS. How much of a concern is that to you? That's fine. I mean, I had 3.6 as well, so I'm fine with that. They are growing. I mean, the competition is coming up. Microsoft is there, Google is coming up. So you're going to see some softness, a little bit of variation from what we expected, but I think it's still a robust growth. I think it's still 50%, close to 50% growth year over year. So it's quite robust for me.
Yep, 47% growth on the whole. As far as the video side of things, they've been spending an awful lot of money on that front. How do you feel about the CapEx?
Yeah, I think the video they are spending, that's really in the early stages. They have competition, but they're doing the right thing. I mean, that's where the whole, you have to have video in your mix to really attract users. And I think they are growing. They've expanded to new territories. They're in 200 countries. So I think it's growing. It's a growth story. They're adding content, especially in India, which is a huge market. They're localizing their content. So they're doing the right thing. So I think you'll see a lot more from there.
I see that they're boasting that they've doubled their content over just the last 2 years in the video library itself. But as I try to go through the quarterly report, I'm not getting a breakdown here as to the number of people who've signed up to Prime Video or what kind of spending they anticipate over the course of the remainder of 2017.
Yeah, I think we'll probably get some color on the conference call. We'll see that. So you're going to see that. I think it will grow. It's a competitive market. You have Hulu, you have Amazon, and your whole range of competitors on there. So it's not going to be easy, and it's going to be expensive. They probably spent about $3 billion in 2016, expected to go to 4 billion maybe next year, 4 to 6 billion, anywhere between that. So I think it's an expensive proposition, but something it's worth doing because that's a good magnet to get in new users, new subscribers.
I'm looking at the stock on a technical perspective, and the relative strength index shows it's a reapproaching overbought territory. So that herd mentality that's helped push it to a 52-week high around the $840 mark. What's it going to take to push it beyond what appears to be a bit of a ceiling on a stock that had enjoyed that level about 3 months ago, hasn't managed to break above it? Where do you see it over the next 12 months, and how does it get there?
Yeah, I said my target is $950, and I looked at, I do some of the parts. So I think it's going to get there. It just has to show a steady growth. You'll see a lot of news flow in terms of their offerings in their retail side, on their the Prime Video side, the AWS side. So there's a whole range of catalysts or growth engines out there. So they just need to show some positive news flow there. So, and I think you'll see that it's a long-term hold. You see the whole retail market is moving towards e-commerce, and Amazon is a leader in that. It's a juggernaut in that space.
We appreciate your insight, Santosh. Thank you so much.
Thank you for having me.
Santosh Rao is the head of research at Manhattan Ventures. Again, Amazon beats the street by 18 cents on a per-share basis at $1.54 per share. Misses on the top line. Q4 revenue misses by $1 billion at $43.7 billion. As you see, the stock is now down by more than 4%. Rao says that's a buying opportunity on a stock that he figures will climb about 14% over the next 12 months.